Bitcoin just closed its most bullish month, up 17% in July since October, or Uptober, as a lot of us obviously like to call it. Very few people remember just how bad the markets have generally been for now over a year. Basically, last October was the only bullish month that we had starting from May of 2021. So really notable that we're finally seeing at least some relief here. The question then inevitably in everyone's mind that I could not care less about is the bottom in? Are we in a new bull market? Blah, blah, blah. But I'm going to discuss all of that, zooming out, giving some context with everybody's legendary favorite guest, Dave Weisberger. It's nice to have him here where we can just talk amongst ourselves without the panel. So I'm excited to hear what he has to say about markets. Always has some hot takes and very strong opinions. Looking forward to it. Let's go.
Let's go.
What is up, everybody? I'm Scott Melker, also known as the Wolf of All Streets. Before we get started, please subscribe to the channel and, I don't know, do a celebratory 17% July dance on the like button. 17%. Kind of a big deal, but also really, let's be real, sideways chop, right? The month could have closed a day earlier or a day later or a week earlier or a week later, and we would just be kind of trading around the low 20,000s, right? We did have, obviously, the big move after Luna down to 17,500. But in general, we had one big drop from, 28 to 30-ish down to 20-ish. And that's still what we're doing, in my very humble opinion, right? And you can get caught up in up 17% or down 20%. But in a market with this much volatility, going up or down 20%, we just call that Tuesday or yesterday morning or the time it took me to take a very brief nap. Right. So as exciting as it is to see that we were up and actually had a green month, going to go ahead, go out on a limb and say not that huge of a deal, really. So now that I got that very quick opinion out of the way, I still go the wrong way. Got Bullish, of course, as a sponsor, your favorite hybrid exchange, hybrid between a decentralized exchange and a centralized exchange. All the benefits of a centralized exchange, meaning you actually get an order book, you actually get to put stop losses, things like that. Massive volume from institutions. And of course, not your keys, not your coins, right? So you get to control your own wallet, your own keys, and you get the massive depth that comes with an AMM, liquidity providers, and a decentralized exchange. So please click on the link below and check them out. And without further ado, I'm going to go ahead and do what you guys actually want, which is bring on Dave. What's up, Dave? How are you, man?
Hey, doing okay, Scott. Doing okay.
So you listen to me rattle that off at the beginning there, that it's kind of just sideways. Is that what you're thinking as well? Or do you think that there's something I'm missing?
Well, I mean, my thesis is basically right now that risk assets are in the eye of a hurricane. And as is normal, the leading edge is worse than the trailing edge in actual effect. But, you never know what will be the damage. So my thought process is simple. Bitcoin was in a trading range, as you know, for a long time with a 30 support, somewhere the 28 to 32 range as a support, the upper 40s as the upper band. After it fell off its all-time high. And then with all the mishigas that happened over, the summer and the late spring, it crashed through that all the way down to 17.5 and then stayed for over a month in the range between, basically 18 and 22. And only with this rally, did it get above 22 and, it's still there, but, who really knows? I have a few reasons why the eye of the hurricane thesis is relevant. First is because I'm old and I remember what 2000 was like. And as far as risk assets go, if there's one thing we know about Bitcoin over the last 4 months, is it's been tracking ridiculously closely to NASDAQ and tech high flyers. I mean, crazy. It's like I saw Bitcoin was sliding a little this morning. Of course, I went over and looked at the futures, and NASDAQ, of course, was about down the same. I mean, the magnitudes are different. Bitcoin's more volatile, but the reality is that's what's going on, which is actually, interestingly enough, incredibly healthy for Bitcoin, given all the if you believe the mainstream press, actual claimed headwinds against it. Let's recap what actually happened to get us into this. While the risk assets were crashing because the Fed raised rates and it's a risk off time, and there was leverage in the financial sector, et cetera, and people were deleveraging. The leverage was much more extreme in crypto. And in addition to that, we had significant loss of trust events. Now, I say this because I want to be really clear. I was talking, as people will talk over the weekend, and you tell people what you do, and I tell people about CoinRoutes, I go, oh my God, well, crypto, it's so much more risky, and we start hearing it. And it was funny, I had a conversation last night at a cocktail party with someone who used to work for a firm called Stratton Oakmont. Now, that's very, very relevant. Stratton Oakmont, for those who don't know, was Jordan Belfort's firm that was immortalized in the Wolf of Wall Street, not to be confused with the Wolf of All Streets. And basically, they were a pump and dump firm that would work on penny stocks and try to get people rich. And when people look at crypto, and we're not talking about Bitcoin now or Ethereum, when we're talking about crypto, they think about everything from Shiba's rise to the next big thing. And all you have to do is look at the responses in your channel, Scott, on Twitter, or, all the people who shill all these coins. And that's important because we have an SEC chair who thinks that securities laws will stop all this. And you just have to laugh because it's literally exactly the same thing that happened with penny stocks. And it wasn't just Stratton Oakmont. So, we were talking about all this crap, but there are some real things. People in the crypto community need to understand there are some basic principles of all financial markets that crypto violated. Some of us have been worried about this for some time, and that really the world doesn't work well without them. Things like ring fencing customer assets. Customers give you money. Those assets are their assets. And the only risks you take with those assets are risks that you disclose to said customer. So if you are loaning them out, then understand what the covenants you put on those loans. If you are trading with them, tell people you are trading with them. It's pretty simple stuff, really. But like I read this morning that Babel, undisclosed to their customers who thought they were a lending team, was basically taking the customer assets and using it for prop trading.
They're a prop fund. Literally, they literally thought that they were going to outtrade the market and do better than the 95% of traders that fail with everyone's money entirely.
Right. And so when you have that sort of thing, you create an enormous trust vacuum. So, if you're a retail investor in crypto, you basically, thought that one of the great things about buying Bitcoin, for example, or Ethereum is you could loan it out and get a good rate. And you thought you were doing so relatively riskless. And we've talked about why that happened. But the fact is when you break that trust, people are going to be gun shy for a while. So that is a definite headwind for getting retail to, buy into, a bull run. So no, I do not believe we are on the cusp of a new bull run, but I do think something very important is going on. The eye of the hurricane thesis is basically this, that the Federal Reserve is in a situation where I think what they're going to do is I think they're going to start doing one of these things where they're with the right hand, they say, or the left hand, they say, I'm raising interest rates to control inflation. But behind the scenes, which people aren't looking at, I think they're going to start quantitative easing again to buy assets. And I believe, and I know this is a unpopular opinion, I think they want a seriously inverted yield curve. I think that governments and corporations, when they do investments, borrow long, and individuals, when they spend, borrow short. And if they can somehow engineer cheap borrowing for the government, which they need, otherwise government's bankrupt, that is not so bad for long-term investments. But at the same time, they have to be worried about inflation because obviously it is the biggest, most regressive stealth tax on the poor that there is.
I wish I had the stats in front of me, but I recently saw, obviously all this hullabaloo about quantitative tightening. To your point, we have a multi-trillion-dollar balance sheet, and I think that they've actually reduced it by like $40 or $60 billion in total. Literally nothing, right? They were supposed to be tightening. The balance sheet was basically supposed to be coming down, and effectively they just stopped it from going up temporarily.
I don't think they can. I mean, look, rather than listening to me prattle on about why, read Arthur Hayes. His last couple of missives have been incredible on this, and he explains why the Fed can't continue on a path of just raising rates and actual quantitative tightening, or it'll crush Europe, crush Japan, and not do wonders for us either. So what do I think is going to happen? I think that as is typical, or people remember 2000. In 2000, in March, there was a crash of the tech sector. The NASDAQ crashed. It dropped through June. to what at the time were significantly, lower numbers. Obviously, it had gone on an epic bull run before that. It then rallied from July through August, back almost all the way to the highs of the NASDAQ. Now, I don't think Bitcoin's rallying back to the highs. Let's get that out of the way. I don't think that's happening. But it did rally through August before it started to crack in September. And then we all know what happened after that. Not so good until, we ended up seeing, it all the way. So it was definitely not a great time. So I do think there's a chance that the fall could be pretty messy. But if I'm right, then this time, if there is a mess, I think at some point in the middle of that mess, Bitcoin delinks from other risk assets. And I think it does so because Bitcoin ultimately at its core is a call option on distrust of institutions. And if what I say happens, it will basically be signaling significant distrust of institutions. I think they will have to stop they certainly will have to stop quantitative tightening to the extent it's happening. And more likely there'll be some sort of quantitative easing in order to try to ease the pressure, in which case I think Bitcoin delinks. So what does this mean for traders? I've been thinking all along that July and August, we would see a drift upwards, a choppy drift upwards on low volume relatively toward the bottom of the bottom of the old trading range. So resistance, the old added support becomes resistance. Somewhere in the 28 to 32 range, I think we drift up to this month. And wherever it gets to, it gets to. And then when the next thing happens, I have no prediction on how low it goes or what happens to it, other than the fact that Bitcoin's not dying, contrary to what the popular media likes to say when these things happen. And I think that we will be set up for a much longer, much more sustainable, probably less violent bull run in Bitcoin when the dust clears. So that's sort of my short and long-term thesis. Don't know how that goes with yours. But the reality is it's not trivial to try to trade it. I don't recommend trying to time it. I personally am not in the market to time it, but I do see that sort of scenario makes some sense to me.
That makes a lot of sense to me as well. I just question what impact the election will have on all of that, obviously, because if, we float up to those levels and then we have some sort of crisis, which obviously, as you alluded to, that wouldn't just be a Bitcoin thing. The next thing you're talking about is obviously macro, not really a Bitcoin thing. Fall off, what happens then to every single elected official, right? So I think my optimism, I guess, about fall is a bit more just because I think that they will concoct something to keep markets afloat long enough to get reelected.
Well, they're going to try that. I mean, honestly, that's bearish for Bitcoin. I mean, the one thing that we do know, and I want to talk about the administration, is it's interesting. Look, people always think about Congress as being the most relevant factor. Understand something, that there are multiple sectors of the economy, and crypto is certainly one of them, where this administration's appointees are incredibly problematic. We can see it. It's the lack of regulatory clarity. Almost 2 years in to an administration where someone taught a course on blockchain is running the SEC is actually astoundingly negative. It's embarrassing. It's embarrassing for the country. It's bad for the industry. It's bad for investors. It's bad for basically innovation and job growth in America. It's bad. And the big problem with the election, the big thing about the election is, will there be a Congress that will make his life a living hell so that he will actually stop doing things in this regulation by enforcement and proposed rules that have no basis in cost benefit analysis. I mean, I've talked to a lot of market structure people, all the time, and I can't think of one, literally not a single one, who thinks that this administration, that any of the rules that are out there, and I'm not just talking about crypto, I'm talking about the environmental rule, others, that any of these rules are grounded in cost benefit analysis, or that he even cares. And that is a problem. That is a serious problem, because if all you care about is a political goal, then you have to ask yourself, what are the political goals? When it comes to Bitcoin, well, we know who hates it. Senator Warren has been very outspoken that how much she hates it. And, I've told you my reason I think she hates it. I think she hates it because she fears it. She understands that a thriving Bitcoin puts a damper both on her ability to have people dependent upon the government and upon her ability to control money. because I think she's smart. I mean, whatever it is, you could say she says things that we think are dumb, but that doesn't mean that the woman is not very smart and sees it as a threat. So when you talk about politics, my concern, is there are lots of issues floating around the election. Not talking about who or what or anything of those issues. I really don't want to get into politics. What I will say is, if the political support for that activist agenda, that is what is empowering the SEC to do some of the things they've done recently, is knocked away, that's incredibly bullish for Bitcoin. I don't know how it is for the rest of the country, but it's bullish for Bitcoin.
Well, what does it mean for Ethereum and altcoins? I mean, we sort of have this interesting place right now, I think, where obviously Gensler and the SEC are going after Coinbase. To me, there's a very clear statement. They think everything's a security, and they're trying to find a way to do that without ever giving anyone clarity or direction while doing it, by just basically litigating. But if they deem everything a security, that's going to be largely problematic for everything not named Bitcoin, right? Maybe Ethereum gets through that, but we also have the Ethereum merge, which is arguably a very bullish event. So I think we sort of have these conflicting forces around Ethereum, and Ethereum generally we know is sort of a weather vane for the entire altcoin market.
Yeah, I think that's, I mean, you mentioned the two key things, and the third one you didn't mention is the XRP case,
right?
Which is
sure.
a very big deal. But let's just talk about this whole being a security. I think, it was Jake Chervinsky tweeted something that was like, I felt like saying word, man. He said that whether or not something is a security should really not matter. The reason it matters is because the rules that the SEC has fashioned over years and years and years of prescriptive regulation, not principle-based regulation, but prescriptive regulation, don't work for digital assets. Full stop. Gensler lies to the American people every time he talks about this topic. It's actually really sad, and I publicly challenge him to debate this. This is now, I don't know, I've lost track, dozens of times, but he won't debate anybody. And the reason that he is lying, and I don't say lying very easily, Scott. I mean, this is not a question of
right. It's not. He's not misinformed.
Political, whatever. I mean, he says laws have been good enough for 70 years. Will be good enough for that, knowing full well that one of the essences of crypto is the ability to trade a security, again, if you believe it, against a commodity. Bitcoin's a commodity, and virtually every one of the coins he talks about have trades against Bitcoin on exchanges. Well, there is no way under current SEC rules for those trades to happen. And I could go further. There are many other rules, the custody rules, the transfer agent rules, all these little rules that people don't even know about. So many of them make it not work. I mean, Hester Peirce, to her credit, identified this 4 or 5 years ago and said we need a safe harbor to be able to work with the exchanges to craft rules that will maintain the principles that we care about. And that will take time, but we need to do that. And that's the only approach that makes sense. So what is this current SEC chair does? He's going to try to sue them. Now, basically, his goal is to wipe out the market cap and literally bankrupt investors who have put their money not just onto platforms like Coinbase's, but frankly, there was a big IPO and he wants to bankrupt those investors. The SEC is not supposed to pick winners or losers or take sides, but that's what he's doing. And he's doing it quite obviously for political power. I mean, a few years ago I said this, or 2 years ago when he started, I said, it seems to me that he's doing it for power. And people thought I was being a conspiracy theorist. Well, now the Wall Street Journal is saying the same thing. So quite obviously, I'm not the only one who thinks that. But my problem with all of this is regulation by enforcement is a serious problem. You cannot get good outcomes. Meanwhile, you have the CFTC. The opportunity to talk.
That was my next question, was going to be like, maybe it's a power grab, but also trying to keep the power that he does have, because clearly there's a push towards the CFTC and he can lose his power entirely over the crypto industry.
Well, yes and no. I mean, look, at the end of the day, the Gillibrand Loomis bill really does make a good attempt at articulating what should be what. But the fact is if he did what Commissioner Peirce said to do, then you wouldn't have that problem, right? If you did institute a safe harbor, if you did reevaluate rules so that being a security was not a death sentence for crypto, you could pull everything together. But instead, what does he do? Is he says, oh, come talk to us. And the companies that have come talk to him the most are the ones that he then litigates. So what does that teach companies? It teaches companies to say nothing. keep your mouth shut, don't work with them, which means by definition, Scott, by definition, he can't make good rules, because the only way to make good rules is to engage with the industry. We've seen this in the financial markets ad infinitum, and I've sat on so many industry committees, been down to Washington, working with the staff at Trading and Markets, who in general are hardworking people who want to do the right thing to protect investors and make things work, but their hands are being tied. And it's really, really a difficult situation. I almost can't understand how rational people can support it, but it is what it is. And that's what's going on. So when you mention the election, in my mind, the real question is, will the Republicans get oversight over him? And by the way, it hurts me to say that, because this should not be a partisan issue. There are plenty of Democrats who are rational, who probably realize what's going on in some of these agencies. Certainly the SEC are problematic, but we've become so tribal in Washington that we have to wait for Republican oversight, which is really kind of a shame, because this should not be a partisan issue at all.
I know we only have a couple minutes left, but I would love to hear your thoughts. Obviously, you at the beginning talked about the problems with commingling customer deposits with lending and trading and all those things. We've now obviously seen this Chapter 11 filing by Voyager, Celsius, and this sort of rinsing of CeFi. What does this industry look like when we inevitably do decouple and rise? Do you think inevitably humans will make the same mistakes again when greed kicks in, but do you think that we're going to see sort of a Bitcoin centric mentality where people continue with the not your keys, not your coins, they just buy Bitcoin and move on? Or do you think that we're going to see a sort of hash of all of these platforms that collapse?
I think that you have to understand, everyone in regulation likes to fight the last war. The whole lending industry grew up because there was huge demand for inter-platform arbitrage that is now not nearly as important because of Fireblocks and what they did with zero confirmation, being able, movements. And so a lot of the what went on, the fire was there. I think that a lot of what happened was essentially fraud. I think the DOJ will be able to, and potentially even the Federal Trade Commission will be able to go after people who lied, like literally lied to customers. I do think that if the CFTC does gain any authority over crypto, what you will see are principle-based rules. Principle number one, ring fence customer assets. That's a really simple principle that I don't think anybody, whether it's banking, finance, hell, real estate, escrow thing, it doesn't matter. Ring fencing customer assets is something that we all can agree with. I mean, not your keys, not your coins is true in a sense, but it shouldn't be true in a sense as well. If those assets were ring fenced, then you should be able to gain access to it, because it's no different. When you own a stock, you don't own a stock. You own a liability.
Yeah, they're lending your stock. It's the same thing. I mean,
even if they didn't,
securities lending is not a new concept.
Yeah, but it goes farther than that. If you own a share of IBM, you own 100 shares of IBM, you don't own them. Hell, your broker doesn't own them. Right. They're in street name at DTCC, and the broker has a right to those, and you have a right to the broker. If the broker goes under, there are rules set up for you to have claim on that stock at DTCC, and they will unwind it, and you will get it. That could be done in crypto. Now, the reality is, obviously, if you can bank yourself, you don't have to worry about an intermediary, and that's basically FTX's whole pitch. Only use intermediaries when you want to or need to. And there are reasons for it. But I do think that principle is really important. I think another principle of marketing in financial services, it's not just financial services, it's in lots of industries. If you lie to people, or if you exaggerate, or if you make materially false claims, you get prosecuted. And there was a lot of that going on. I mean, it's I'll go back to Do Kwon beating up people on Twitter who basically predicted what could happen, saying it's impossible. Well, that's marketing. And if you were in a brokerage firm, forget it. Your compliance people would never let you do that. I do think you'll end up with rules on that. I do think you'll end up with a series of principles that will end up influencing how the next round of corporations approach this. But one thing I want to make clear, you said CeFi. As much as you could argue about Coinbase, some of the things they've done with vertical integration or FTX, you could say lots of stuff. But the fact of the matter is, those firms didn't do, at least as far as I know, the same stuff that the lenders did. And so I think it's an overbought.
They're not lending out your money. Right. It's pretty clear. I think your assets are there on Coinbase, and there's not much concern about that. But
right. So, I mean, if you ask me, what does it look like? I think with my hopeful, most optimistic scenario is the CFTC eventually gains the authority to regulate what we consider crypto, that the SEC modulates and actually tries to do a better job for digital securities. And we eventually, the industry grows. It could take a long time for that to evolve, Scott. And the reality is that's something people should be ready for. The fact is people still will invest if they think it's going up. And there's a lot of reason to believe. I mean, let's face it. I've said this many times to you. I think that the positive asymmetric return profile of Bitcoin is huge. And frankly, the positive asymmetric return profile of Ethereum is huge if the merge comes off without a hitch, if it does help decrease gas prices so that it could support the various markets that it supports. I mean, you're right. I mean, the merge, if it comes off without a hitch, is a bullish event. Right. Typically, my trader brain says that means you should have been buying a while ago. And that when it happens, sell because everyone will have bought it expecting everybody else new to come in. The only reason that doesn't necessarily shape up here, because there's a lot of skeptics out there that the merge will come off without a hitch.
Yeah, and
so
a
I
lot of
don't know how big of an event it'll be. But
and a lot of supply is staked as well. All right, well, Dave, I know I got to let you go. Appreciate you coming on. It's always great, like I said, to be able to just talk directly without 3 or 4 other people. I know everybody here loves your perspective. Everybody, you can follow Dave now. I got to go look at the exact, but it's at Dave Weisberger 1 on Twitter. I know you guys want to follow him because he has the best hot takes and has no fear going after anyone whose opinion he doesn't agree with. It's fun. Watching you respond to people is like my favorite activity on Twitter.
Yeah, I can't suffer fools gladly. I'm sorry.
Well, we appreciate you, man. Thank you so much once again.
Take care, Scott. Thanks.
All right, awesome. So I think we can largely agree. I see some comments over here. People are saying, are we hearing these gentlemen say we have the Republicans to save the day for crypto? As POS sell us, investors out all the time, fuck Republicans. That's not what he was saying. It was not what he was saying. I think, in fact, he was saying that we basically need gridlock and everything to just stop so that Bitcoin can decouple. But I don't think we're saying that one party or the other is inherently favorable. At least that's how I read it. It's really just a story of stopping this regulation by litigation and enforcement that we're seeing from the SEC, which could be frozen by having gridlock effectively in the government. Good times when you're cheering for something like that. Let's make our government do nothing so that we can stop sucking as much. That's basically where I'm at the moment with both sides. So moving on a bit with the news. Now I have to share my screen. I didn't do it before because I'm an idiot. I wasn't prepared. Here we go. As I said before, July became Bitcoin's best month in 2022, a 17% surge. Yay. 17% in July. Obviously now leaving the debate as to whether the bottom is in and what could be next and blah, blah, blah. And the answer is nobody knows. But let's take a very quick look at the chart and see what it's saying. Of course, we have this massive monthly channel that I've discussed no less than 7,000 times. But it was my case for Bitcoin to go up to 6 figures, which didn't happen. So take it with a grain of salt, right? As you know, this massive channel, 3 perfect touches on the bottom before. But basically down, up, confirmed, down. We thought it would go up again. Every time it had broken this center dash line, the equilibrium, it had traveled to the opposing side of the channel. Didn't happen to the top here. But surprisingly, almost happened here to the bottom, right? I mean, the bottom of this channel now on this month is 17,005. That's the recent low. So even a drop down there would be a massive support to this endless bull market when you zoom out, right? If you want to talk about the definition of a bull market, bear market, everybody has it. But this is Bitcoin since 2013. Huge swings, but higher highs and higher lows, right? Higher highs and higher lows. Basically, unless it breaks below 3,785, that would be the case here. And I don't think anybody for now is expecting that. Of course, RSI on the monthly was the lowest it's ever been for the last 2 months, breaking down below 43.88, right back there. Looking at the weekly chart, lots of cause for celebration here, I guess. Right, let's zoom out to the 200 MA. I've showed it to you guys 1,000 times, but I've got you a captive audience, so you can't say shit when I'm redundant. So here we are, 200 MA right there, right? 200 MA right there, 200 MA right there. This in March of 2020, yeah, shit's that bad. Was the only time that we had a clear close below and the next candle closed above and we went up, right? So we're all saying, hey, 200 MA, reversion to the mean on the weekly. This is the spot where we should find support. And what happened? We went full Hiroshima and nuked right through it, right here. All the way down to 17,005 when it was sitting at 22,344. It offered about as much resistance, I don't even want to say, as me boxing Mike Tyson. I don't know. I don't have a great analogy, but that's what I'm going to throw out there. No resistance, right? And then we traded below it for 6 weeks while we're back above. And today, almost all, I mean, within $100 came down to retest it as support. Listen, I have no idea what the hell is going to happen. I just know that we've never been below it for more than one candle. And when we've gotten back above it, that's always been the bottom of these markets. Not saying that the bottom is in. I'm just saying all we can do is look at historical context, take it for what it's worth, and hope that it replays again. I don't even like this line. That line's stupid. Forget that line. Right? So we're back above the 200 MA. Yay. Good news. On the daily, back above the 50 MA. We hadn't been above that since April. April, right here. April, when everything really went to shit at 42,000. We've been below the 50 MA. Hadn't even touched it since April until we broke back above it, temporarily below, now back above. So there is some cause here for a bit of celebration. But I mean, as we alluded to, man, this is just a chart. You know, there's a lot going on in this world right now. And if we get some huge macro headwind or terrible news or something, a line on a chart ain't going to stop it, right? So if you're trading it, these are great indicators. If you're investing, you don't give a shit about any of this anyways because you're investing for the long term, right? Not to get rich quick. So it's just fun to take a look at it. I mean, look, if you're talking about that sort of monthly channel, which we were, right? Let me see. Where's that chart? I think this was it, but I don't know. I had another chart open that I can't seem to find. Maybe it was on this one. Let's see. Nope. Either way, as you can see, since the bottom, we have nothing but higher lows and higher highs, which is a new, refreshed, slightly bullish trend, right? Low, high, higher low, higher high, higher low, higher high right here. It's just ranging. People would call this a bear flag. It's not. A bear flag would have had to end like right here. A bear flag can't extend this long. So right now we have a renewed bullish trend from the bottom on low time frames of Bitcoin continued to make higher lows and higher highs. Again, take it with a grain of salt. No idea what is going to happen. No idea what's going to happen. And of course, as we alluded to, why is it going back up right now as we're talking? Well, here's the NASDAQ going back up. Really easy. Just go zoom in on QQQ, obviously, which represents the NASDAQ. You can see what's happening. In other news, because this is news, because apparently it's news now, our opinions on whether or not we're in a recession or the definition of things are now news. We have Janet over here, Yellen. Janet Yellen's Yellen. She says she sees no recession, calls U.S. economy exceptionally strong. Yeah, super strong, guys. Feels strong. Your average person right now is sitting at home, broke, wondering if they'll ever get a raise and paying 10% more for everything they did last year, thinking, you know what? God damn it, this economy is strong, right? Strong. I mean, what is a strong economy anyways? Is it low unemployment? How is it defined, right? All we're going to do here is argue over definitions. Yeah, we have relatively low unemployment, 2 consecutive quarters of negative growth. Seems not that strong. A lot of people would define that as a recession. But Janet, of course, saying, yeah, well, the definition is of recession. It's more complicated than that. Let's not jump to conclusions. The fact that the economy is so strong means that we're not in a recession. And I say, who cares? First of all, Janet, I love your hair. It's amazing. Never change. And second of all, it doesn't matter. What matters is what your average person who's living in this amazing country is feeling on a day-to-day basis about their personal finances. And I can tell you anecdotally that it ain't great, right? It ain't great. So we can argue all day about whether or not we're in a recession. Some people would say that we've been in one for a very long time. The funny thing is by the time they deem it a recession, we're usually on their way out. You can look at the historical context, but every time the government generally finally says, yes, we're in a recession, it's usually at the tail end because the government is a trailing indicator because God forbid they actually do anything in real time to help anyone. Moving on to some news that I'd rather not be reporting. No offense to Aave, but Aave passes proposal for yield-generating stablecoin GHO. You know what the world needs right now? Another yield-generating stablecoin backed by volatile assets. That's sarcasm. That's sarcasm. Think right now, listen, this is their plan. I'm not like, they have the right to do this, and maybe it will come off without a hitch, but God damn it, Luna people. Didn't we just do this shit? Like, come on. Maybe this will work out great. But like, I don't know. Not many things trigger me more than the terms algorithmic stablecoin or yield generating, or even in this case, they say fully collateralized. Okay, that's great, but it's not fully collateralized by dollars. Wasn't Luna basically fully collateralized, backed by these strong asset called Luna? They could go from $100 to sub penny in 17 minutes. Okay, it took longer than 17 minutes. That was hyperbolic. It took less than 17 days probably, though. I mean, what have we learned here? You know, listen, we all love Bitcoin. We think it's an incredible asset, but it's not the asset that you want to be backing a stable coin with when it can go down 70%, right? And I think we just learned that, but we're doing it again. Doing it again. It's going to be amazing. I have high hopes. High hopes, super high hopes. This has to go well, can't go badly. But GHO, which to me means get the hell out, right? Which is what maybe we should do with this. GHO allowed you to mint tokens against the supplied collateral and then the thing. Yes, and they have your collateral, so I guess that part of it's good. But what happens if that collateral, I don't know, goes down 70% in value? Seems like another attempt to do a better version of Luna, and maybe it will succeed. But damn it, right now, we just need to, like, I don't know, go hide in a cave for a year or something. Wait till Gensler dies or has a stroke or is fired or something. God, it's terrifying. Terrifying. We're still doing this. Moving on. Going back to what Dave was talking about here as to clear definitions of what people are doing with the assets and people being honest. Crypto lender Voyager ordered by US regulators to stop misleading customers. Did I just tell you? Did I mention that governments and regulators tend to be a lagging indicator and behind the market? Well, no shit. They're literally in chapter 11 and the government's telling them, hey guys, hey company that doesn't even allow deposits anymore. People don't know if they're getting their assets back, may not even be solvent. You guys should stop misleading customers now. Like what is so Voyager now is going to go change a few sentences on their website when you can't even deposit funds anyways because they said that they were FDIC insured and that was not altogether forthright. Okay, of course, it's very clear that they were not fully FDIC insured. The case was that the backing bank is FDIC insured and that your US dollar accounts were not commingled with your Voyager accounts in fact, Voyager was effectively just a pass-through, right? If you deposited dollars, you weren't really depositing them in the Voyager, you're depositing them in a bank. That bank is FDIC insured. The problem is that bank has to go under for your FDIC insurance to matter, meaning that what happens with Voyager is effectively irrelevant. We've talked this to death, right? You guys know exactly what this means. I just find this fucking hilarious that the FDIC and Federal Reserve now are like, hey guys, you should probably stop. Considering the company is, I don't know, stopped. Speaking of other companies that people have lost their assets on, including people named Scott Melker, Vauld gets 3-month moratorium extension to continue exploring options. This is from Singapore regulators. They were asking for 6 months. For anyone who's been following this, you know that Nexo also has a period now where nobody else can make an offer on Vauld to do due diligence because Nexo may very well buy out Vauld. Vauld has a much, much, much smaller hole than any of these other companies. Now, that, yes, is a credit to them, but only because they're not holding billions in assets. They're holding hundreds of millions of assets. So on a percentage basis, they're effectively a smaller company that just has a smaller hole to fill. So it'll be interesting to see how this pans out. I would say that Vauld depositors probably have a better chance than others because of the Nexo deal in process, if it goes through, of seeing their assets back. But for now, don't get excited. I can see right here the article that Dave was talking about before. Babel Finance lost over $280 million in proprietary trading with customer funds. I wasn't going to talk about this, but this is basically like me saying, hey guys, I've got this amazing thing. You deposit into the bank of Melker And it's a bank, guys. It's great. It's going to be super safe. And I'm going to give you yield. And then what I do is I go over to Binance and hit the 125x leverage with your money. And it's going to be great. And for like a month, I'm killing it, right? So those yields are crushing. And then in 3 minutes, I lose everything. And that's not my money. It's yours. So it's fine. Fuck you, right? And that's basically what Babel Finance was doing here. And to some degree, what Celsius, some would argue, was doing. And many know, people forget. I mean, listen, BlockFi came out of this smelling like roses largely because Sam Bankman-Fried effectively bailed them out and because they were the first to liquidate Three Arrows Capital, right? Like BlockFi was about 3 days away from being probably in the worst case scenario of any of these companies, right? If they had not liquidated that. So yes, their risk managers made a great decision, but you shouldn't be waiting on one decision to find out if your platform is going to be solvent or not. But BlockFi in the past was 100% trading everyone's funds, GBTC premium, cash and carry trades. I don't think they were on Binance using 150 or whatever they offer X leverage, but very, very similar situation. So just because they made it through doesn't mean they weren't doing the same things. And we already had people arguing with them back then that they shouldn't be trading with customer assets. Either way, the cleansing, it is coming. It's coming for us, unfortunately. Will be interesting to see how this all pans out, both for these companies, the executives at these companies. I would say Mashinsky's not looking too likely to come out of this clean, and others, right? And finally, jewelry brand Tiffany and company unveils 50K CryptoPunk necklace. Would you buy it? Collection of diamond encrusted pendants is exclusively available for CryptoPunk owners to purchase and limited to 250 editions. So if you want to buy one of these Tiffany CryptoPunks, you have to already own a CryptoPunk, to my understanding. I'm going to be honest, man. I didn't read it. I did the thing that I tell you guys not to do. I looked at the headline. So I don't know what the exact details are. Mike gave me a summary over here. Let's see. Oh, where is it? Where is it? The collection of diamond encrusted pendants. Yeah, I said that. So 250 of them. Diamond encrusted pendant necklace for 30 ETH, so around $50,000. A pop to holders of the famed collection. Each necklace will include a combination of 30 diamonds and gemstones, according to Tiffany's website. Hell, hey, at least these will have probably some value. Punks might make it. Punks actually might make it through the NFT cleansing. And I would imagine if you're a punk, maybe you would do one of these. Personally, I would just go to Jacob the jeweler and have him make me like a Flavor Flav diamond punk clock. Like this huge, size of a fucking pizza. That's what I would do. But listen, I mean, it's kind of notable that Tiffany's is taking note of CryptoPunks and NFTs in general and actually offering a physical good that might have, I don't know, like real world value because it has diamonds in it. Your CryptoPunk that you've bought, your NFT, it doesn't have actual diamonds in it. So it could just go to zero. Could. I don't think that will happen, but it could. It could. I think that's all the news. Oh, look, Bitcoin's going up, huh? What do we got? Yeah, bouncing a little bit. ETH kind of bull flagging right now, going to be honest. Ethereum still looking, I would say, if I had to choose as a trader right now, I think ETH is probably the better trade. Oh my God, I just triggered so many maxis with that comment on the way out. Wow. I wrote the newsletter today about sort of the waving the white flag to all of this maximalism and tribalism and nonsense. Man, it is incredible. It is incredible to see how angry these communities are at one another. Christopher Bednarik says my cuss words are hurtful. Chris, fuck you. Just kidding. Just kidding, buddy. Just kidding. I didn't mean that. It was just an excuse to say it. You're great. Love you, Chris. Get you a grill, Miguel Hernandez says. I used to have, in my DJ days, not a joke, in my 20s, I never wore it, but I had a grill that said Melker across my front 6 teeth. And it actually really hurt my gums. It was very problematic. I don't know how people wear those things in their faces on purpose, but your mouth is not meant to be made of gold, last I checked. But yeah. Yeah, see, Chris, good. Glad. Yeah, bring back Gary June. That guy was funny. I don't know where he went. Haha, love it. See, Chris is a good sport. Chris is a good sport. Now, I have to say, yesterday, with much fanfare, not to say unexpected, but I was like on a plane. We released podcast with Ran Neuner. I don't know if you guys saw that. Obviously, wasn't anticipated some polarization there, of course, but about how he effectively lost over $100 million in 2 days on Luna. And man, I just think you should watch it. It's actually been the most, I think the most traffic I've probably ever gotten on a video ever in the first 24 hours. So clearly it resonated with people who obviously didn't lose hundreds of millions of dollars, but who lost a lot of money. And listen, his $100 million, maybe your $1,000 relative, emotionally into your portfolio. So it's sort of not, yes, it's an impressive number to put into the headline, but it's not about the number. It's not about the number, right? It's about the feeling of losing something that you thought was secure, as he says, sort of about the plans that you had for that money, what that money meant for your life, the security that came with it, what you were going to do with your kids, the vacations, or even just the bills that you were intending to pay with it, right? And so whatever your thoughts on him, I see people saying things, whatever your thoughts on him, I think the sentiment that he shared resonates with a lot of people, right? And the feeling of everything sort of disappearing at once. And listen, I didn't have that feeling myself with Luna, but clearly I'm not exactly in the VIP booth at Studio 54 right now in the 1980s with my Voyager situation. I'm actually outside at the back of the line getting beat up by the bouncers, right? And so like we all to some degree have that feeling, wonder of what's going to happen, if I'm going to get it back. Luna's worse because that shit's gone, right? At least with Voyager, I think that I will certainly be able to get some of my assets back, whether it's going to be how I like it or not. It's not going to end me. But I think for a lot of people, seeing their Luna go from, a meaningful holding to fractions of a penny is probably a huge, huge blow. So listen, if I could say, I would tell you to listen to the podcast regardless, but if you've sort of had those emotions, to hear someone of his stature, with that amount of money, who's built that successful of a business, say, I never really understood how people contemplate suicide. And I'm not going to say that I did, but I get it. Pretty powerful words and a major loss. So I definitely think it's worth giving a listen to if you guys missed it. For whatever reason, people it has seemed to really resonate. So I will be back tomorrow, 9:30 a.m. Eastern Standard Time, because that's what we do, at least this week. I will be taking a break at the tail end of this week. Again, man, I've got a lot going on. Going to try to have to figure out a way with all these conferences coming up in September and October and November. Now that we're trying to do the podcast more in person, obviously it means that I'm away from the live streams a little bit more. But a lot going on. And listen, August is the most boring month anyways. I took basically a week off last year in August and nobody seemed to notice because it's fucking August. Like, go outside, touch grass, right? Jump in a wave or something. But I will be back tomorrow regardless, 9:30 a.m. Eastern Standard Time. Thank you once again to Dave Weisberger. He's amazing. We love having him here. Certainly the best takes in the game. That's all I got for you guys today. See you tomorrow. Peace.
That's dope.